Hey guys, welcome back to another Trading Edge video. Today we're going to take a look at, and we're going to answer the question of, hey guys, welcome back to the channel. My name is Akil Stokes. If you're brand new, this is the Trading Edge video, which is a weekly video that I do here on YouTube, kind of recapping what happened during the week and providing you some insights and my outlook of what I'm paying attention to for the week to come. If you haven't done so already, make sure you subscribe. That way you don't miss any of the cool videos that I put out throughout the week. And also, if you ever have any questions or comments about anything discussed in the video, please leave them below. I know I'm dealing with a wide range of traders. Some of you have been following with me for years and you're professional traders out there. Some of you are brand new. So it's often kind of hard to keep the balance between dumbing things down enough for the new trader, but also explaining some things that I want to explain for the seasoned vet. So if something doesn't make sense, let me know. I do read the comments. I will answer them. One of the questions I got this week was, Akil, what the hell happened in the markets this week? Well, a lot. There has basically been a massive shift. Now, I've come on for the last few weeks here saying that I don't think there would be any interest rate cuts here in the US this year. However, the market's consensus, tough word for me, consensus, ding, got it right, was that there was going to be one. Well, things have started to shift a little bit. They've been on the verge of shifting, but I think this week is where we're going to see the biggest shift of the market, expecting one rate cut to now two rate cuts, right, starting in September. And there were two main things that caused it. One was our Fed Chair Jerome Powell's testimony on Tuesday and Wednesday, I think it was, where he came out as being very dovish. And then we followed it up on Thursday with pretty much our most important inflation-related news event, which was the core CPI, and we had some news Friday as well. And with our core CPI, the numbers came out lower than expected, which was a big boost to the idea that two rate cuts will be coming instead of one. So the market latched on to that. Now, we know that was a very important news event. However, if you looked around the market, specifically on the yen pairs, we saw some crazy moves, right? I'm looking at dollar yen right in front of me, and we just look at Thursday here, and you can see that during that news event, we started off at 161.68, 161.68. Hey, I guess it would be 161.8, close enough. And we went all the way down about 400 pips to 157.47 before closing a little bit higher. Now, core CPI, big, important news event, but not that big. So the question is, what happened? Well, this is where the second part of the story comes in, right?
But wait! There's more!
Remember that thing we've spoken about for months now, Bank of Japan intervention? They did it before way back, and then they did it again just a couple months ago. Well, it hasn't been proven yet, but it looks like it happened again. And why we're safe making that assumption is because the market doesn't normally move 450 pips, right? That's not something that normally happens, right? Maybe if you get a Brexit, maybe if you get this crazy, volcano blows up and half of America goes under, but not for a news event. No, it doesn't move that much. So that means something else is up. So I promise we're going to dig into charts, but I think this is very interesting because a lot of, let's do this. So a big myth in trading is manipulation. And before I get into a little bit about what manipulation is, I am doing a show in 2 weeks, maybe, and I'm going to be on the show to talk about debunk four trading myths. And what I told the show director was that, hey, instead of me coming up with them myself, I would ask you guys. So if there are any myths that you believe in or myths that have been debunked that you used to believe in and are now untrue, or things you have questions about, leave them in the comment section below. I would much rather talk about the myths that you guys want to talk about versus just sharing my favorite ones, because I got a bunch of them. And if you've listened to any of my podcasts, I go over them a lot. So if you have any myths that you want debunked, let me know. I'm going to read them, and I'll try to pick four from what you guys say and put that on the show in 2 weeks or whenever I'm supposed to do it. But one of the myths out there is the manipulation in the market and how that manipulation happens. A lot of traders think manipulation happens in the way that someone is hacked into your computer, they're watching your every move, and they're doing the opposite of what you trade, and that's completely untrue. But manipulation does happen in the market in the forms of like intervention or big players making big moves. Now, here's the thing. When you talk about institutional trading, right? Institutional trading, the big boys, the big banks, right? The smart money, whatever you want to call them, they have to trade different than the retail trader. The retail trader can jump around and dance and buy and sell wherever we like because we're not swinging a big enough stick to move the market. These other traders are. So they have to be very intentional about what they do. And I want you guys to ask yourself this question, right? If you are going to take a big swing in the market and you would like to make that big swing go unknown for many reasons, one reason is you don't move the market against yourself. When is the best time to do it? Is the best time to do it when no one's in the market, there's no liquidity, no one's paying attention? Or is the best time to do it when the market has a high impact event, news event that everyone knows is going to rock the market, that all the traders are crowded around their desk looking to buy or sell based on the reaction? Isn't that the best time to kind of slip in a little intervention while everything is already moving? So we'll probably see earlier in the week if the Bank of Japan intervened. They'll, you'll probably hear like, oh yeah, we did last Thursday and we did again on Friday when no one was looking. But that is kind of the idea right now. So if you're worried about the madness in the market, that's what we're seeing. Now, this has also created a lot of opportunities in the market, and it's going to be another lesson for you. So I'm hitting you guys with lessons this week. I hope you don't get bored, but this stuff is often more important than the chart work. We're just going to take dollar yen for example right here. But if we look at a lot of the yen pairs, this is the common theme that we're seeing. We're seeing the big massive candle from Thursday, and then we're seeing a little bit of relief off of that. And then we came right back down to retest it, giving us this double bottom type of formation. If you look across pretty much all of the yen crosses, I have about 6 that I consistently watch. It's the exact same thing. Now, before we get into the opportunity that exists, I want to explain why this could be dangerous, right? This can be dangerous because if this is a setup, if you are a double bottom trader that needs price action to have the RSI oversold, divergence on the retest, whatever you want to have, if this is a legit double bottom situation and you've got this happening on all 6 pairs, you run into the risk of having 6 valid signals pointing in the same direction at the same time. This was something a friend of mine may have done a long time ago and gotten into a lot of trouble. And by a lot of trouble, this friend may have lost $30,000 doing this because he had multiple signals all pointing in the same direction and he took all of those signals at the same time and they all lost. That's what the friend told me, at least, because he wasn't really, up to date with risk management and all that fun stuff. So a warning that my friend gives to you is that don't pick all of them. One, if you have a portfolio, right, you should only trade the ones that are in your portfolio. I'm a believer in traders trading a set portfolio, but that's just a personal preference of mine. If you're someone that doesn't have a set trading portfolio, you can kind of venture anywhere. What you want to do is one of 2 things, or maybe 2 of 2 things. One, only choose the best ones, right? So do your overall analysis, look at the higher time frame, look at the location of the market, and pick the scenarios that give you that stand out amongst the rest, right? You should have a grading scale that separates your best trades from your good trades and all that fun stuff. If that's not the case, give yourself a limit. And again, I'm not a personal fan of this. That's why I like to set portfolio. But if you're allowed to do everything, give yourself a limit where you can only have exposure to a certain amount of markets at the same time. So for example, we have 6 of these setups setting up. You're only allowed to take 3. So pick your best 3 and that's it. And that way you don't put yourself in a situation where you're potentially overexposed in the market and you end up like me losing my friend losing a lot of money in a short period of time. Now, real quick, if you are going to take this double bottom at market, or you can do something that we spoke about in a video not too long ago. I hope you're paying attention to the channel because, again, these lessons kind of compile on each other, where you look for the 2618 trade, right? Remember we spoke about that? Price action comes down, we retrace, we have the double bottom, we wait for the violation of the peak of that double bottom in this case, and then we look for one more pullback here, right, to the 618 if you're trading it traditionally, but really any type of pullback could work. And then we look to trade this up to the next level. Now, I know we spoke about intervention earlier, and this is what happened the last time we had intervention. Everyone was like, Akil, how can you pick long on the yen, the intervention, and blah, 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 right? And this was back like in April, right? So this was back here, right? When people said, Akil, how can you look to get long the yen? There's nothing in here, but there was supposed to be like water, so I could do the dramatic like I told you so, but it's empty because I just worked out and it's all gone. But you guys get the point I was trying to make, right? Akil was right. Ha ha ha, take that, right? Here's the thing. I told you guys before, I don't think the intervention matters as much as the overall monetary policy situation, specifically here in the U.S. And again, this because we're looking at the dollar yen. It may be a little bit different on some of your other crosses, but again, the two main safe havens are the dollar and the yen. Those are going to make the biggest splashes, right? I don't think the intervention means too much. I don't think it's going to have that much of effect unless we get a situation where, again, we're starting to see dollar weakness, which, again, could be the case as the market shifts to 2 rate cuts versus 1. But it could also not be the case if because that's not solidified. So if we get news or releases that back up off that, we're going to see dollar strength again. The point is, don't be scared just because of that intervention, right? You can see that we dipped down here, we gave a very nice opportunity, and then we still rallied massively off of that. So don't let that fundamental, I guess, factor input what you see as far as the technicals on the trade. Now, if you're a fundamental trader, then yes, fundamentals come first, technicals go second, do what you want. But as a technical trader, let's look at the chart first. Let's use the fundamental second. Maybe it affects how you take the trade as far as being more aggressive or more conservative. Maybe it affects how you take targets on the trade, meaning instead of looking for a continuation higher, right? You take some money off at a retest of the highs just in case we don't see that follow through. It's fair to let it affect those parts of your trade, right? But don't be like perfectly valid signal, grade A trade, can't enter it because I'm scared of intervention, right? We've seen it before. The market didn't care about it before. I have no reason to believe that the market's going to care about it again. I think the bigger thing is the U.S. economic state over anything else. So use that for all of the different yen crosses that I showed you. Now let's dig into some more pairs. Gosh, this is going to be a long video already. I'll try to make this quick. Dollar Canada, the loonie. Let's go back to the loonie. Can I get there? Here we go. The loonie. We know the loonie's been in consolidation, right? We have this tight consolidation here. We broke out of we had a tighter consolidation on a lower time frame. We broke out of it, but we're trading at the bottom of the range here. If you're a range trader or someone with a bullish bias on dollar Canada, we've double bottomed here at the bottom of our range, right? So you're in a situation where you know your risk. You're at the bottom of the range. We know if this range is broken and violated, your trading is done. So it's a good opportunity to look for a buying opportunity down in this area and look for a trade back across the highs of the channel. When I say the highs of the channel, I shouldn't say the highs, right? The highs are up here, but the next level of structure within the channel. So that could be a sneaky trade there. On dollar Canada, of course, you can take the same 2618 approach as well if you want more confirmation, where you wait for confirmation of the break of these highs, and then you look for the retest and then to trade it up. So check out the loonie for that. All right, next we're gonna go over to New Zealand yen. This is a straight structured trade, right? We got GDP news for the pound as well come out this week, which is kind of overshadowed by Thursdays and Fridays events. But we saw a big rally here on the pound. Price has rallied up a massive amount in its own right? 208.64s all the way up to about 212.47s. And we've come into a previous level of structure. And this is how counter trend traders think, right? Or even the whole think like the other trader situation that I talk about, right? So imagine you are a buyer right here, right? You got involved at the perfect location, whoop-de-doo, you're the best, right? At some point, buyers are going to want to take profit, right? Because that's the goal of trading, to make money. So the question you want to ask yourself as a counter trend trader is, okay, where are these buyers, or I should say bulls, right? Just so I can use the thing. Where are these bulls? Where are these fat cows looking to take their profit? Well, I would guess that some of these fat cows are looking to take their profit right up here, because this would be the first sign of danger, just as I spoke about with the dollar yen situation, where it's like, hey, if you want to be cautious, instead of looking for the extension, take a little bit off at structure, right? These guys are thinking the same thing. So you have two things happening at this level, right? You have buyers who are looking to cash out, and by cashing out, they become sellers because you have to sell to get out of your buy. You have less buyers that are interested because price was cheap and appealing here when we were far away from structure. You probably don't want to jump when you're close to the ceiling, so you have less buyers interested in the market. And then we have a brand new flock of sellers that are interested as well. And what that does is it kind of reverses the pressure in the market. We have more selling interest versus buying interest, and that's how the market moves: buying interest versus selling interest, and rates of orders coming in. So this is a good area to look for relief. I'm not saying like this is going to be a full reversal and things are going to come here and then go all the way down to 203s. No, but I would expect a little bit of relief, and we're already seeing that with the loss of momentum, right? High momentum candle, and then we get smaller, right there. So look for a selling opportunity at this level of structure. If we break and close above, the selling opportunity is over. Get out, get out, get out. But if you get your signal in here, again, that signal could be whatever you want it to be. We won't spend time going over the massive amounts of ways that you can enter a trade, despite the internet world always being so obsessed with, how do I enter the trade? The truth is, it doesn't matter how you enter the trade. Everything I just showed you before, predicting the right location, that's what matters. You can enter any way you want. I don't care. But keep an eye out for shorts at this area. It's a nice level of structure. RSI is massively overbought as well, up at 87. Whew. So keep an eye on pound New Zealand. This is a counter trend trader, structured traders. I'm just going to shut up because I'm going to jinx it. Keep an eye on it. Lastly, we're going to take a look at gold, because I've been getting yelled at in the comment section about gold. And here's an example of a time where Akil was wrong, right? I've been calling for short. Now, I'm not completely wrong, right? We're still hovering here. I'll get to that in a little bit. But we were looking for short opportunity after short opportunity after short opportunity here on gold for the past month. We had some very small ones in here, but the bigger one we were looking for was actually a head and shoulders pattern, and we were looking for price to violate this neckline. Now, we never violated the neckline, so we never got the head and shoulders pattern, so it wasn't actually like a trade that was triggered, but we thought we would see this, and so far we haven't. We've actually seen it in the opposite direction. We've also seen a few busted patterns in here as well. We had a busted cipher from last week, 2 weeks ago, right in here. Time flies when you have kids that are home on summer vacation, but we had a busted cipher right here that got blown through. We missed a bat, and when I say missed, we didn't actually miss it. It just never got filled right here. Just peeking, it looks like we had something on the daily too, a Gartley or a butterfly. Sorry, live analysis. Nope, can't be same leg for the candle. So yeah, don't worry about that. This would be an invalid one. But basically, we're right back into the range where we started making our bearish predictions, and now we're back consolidating. So we are still hovering between these highs and these lows. We are in this high and tight flag pattern, which you guys saw in the shorts video that I put out the other day. If you are a bullish trader, you're waiting for the violation. Now again, we're at highs, so it's always kind of weird to trade stuff at highs, but if you're an investor, if you get a violation of this level, that is a very powerful sign. If you are a short trader, same thing. It's a little bit risky. It's going to sound weird. It's a little bit risky selling at the highs here. It's going to give you the best risk reward, but it doesn't quite give you the proof that we're more likely to go lower versus higher, especially considering the bigger economic situation, as breaking this trend line, or not trend line, this level of structure to the downside would. So right now we're back at a hold on gold, bigger picture. We just have to wait and see for the market to give us a signal here, but that's an update, and we are trading again at the level where we originally started these ideas, with this descending triangle right here and the breakout that occurred after that. So back to square one. If you want to follow along with these ideas, check out our live rooms offered over at tier1trading.com. We have a London session, we have a New York session where we look at the charts every single day. It's a great community, it's great interaction. It's a great chance to work on your skill of trading. Check it out, www.tier1trading.com. We've got a workshop coming soon. I can't give you any more details than that, but make sure you stay in the loop. That way you don't miss it. All right, take care.
I wanna be the best in the game, invest in my name. Check no restraints, I'm obsessed with the pain. I ingest, I retain, assess and I change. Possessed by the thought I'll be free one day from society's restraints. Money, clout and fame, mud, disease, a plague. We all love to hate, have to play the game, have to make a name. All our insecurities are on